Shell India has been given a notice of $1 billion from the IT department. Of course, Shell India can challenge the order at DRP, but this clearly adds around 15,000 crore to the taxable income of Shell India. And Ashwin Mohan is right here with us on the phone line to understand this better and assess the impact of this particular huge blow for Shell India. Ashwin, you broke the story for us. This has been simmering for some time now, but now some big numbers are being issued, $1 billion as a draft assessment.
That's right, Ajay. In fact, I'll put this simply. This is Shell India's worst nightmare that has come true as far as their tax dispute in India is concerned. This development adds yet another ugly chapter to the ongoing tension between the Income Tax Department and MNCs, who are claiming that the Income Tax Department has adopted a very aggressive approach towards them. Keep in mind that earlier Shell India was accused of underpricing an issue of shares within the same group by 15,000 crore rupees. Now, the biggest fear that Shell India had was that eventually the Income Tax Department would go ahead and add this entire component of 15,000 crore rupees to their taxable income. That is exactly what has happened according to top-level government sources, who are telling me that a draft assessment order has been issued, adding 15,000 crore rupees to the taxable income of Shell India. What is the net tax impact on Shell India? 30% of 15,000 crore rupees. That's around 5,000 crore rupees, or nearly $1 billion in taxes. So therefore, this does come as a huge setback for Shell India. Also keep in mind that you were bang on the target, Ajay, when you said that they do have legal options. So as of now, the road ahead is concerned, they have a period of 1 month. Within this period of 1 month, they need to decide whether or not they will challenge this order. If they have to challenge this order, they will have to go to a forum called the Dispute Resolution Panel, or the DRP, which will then take 9 months to pass its order. So therefore, as of now, the state seems set for legal fireworks. And keep in mind that this is one case which will go all the way up to the Supreme Court, because this is a high-stakes case. And also keep in mind that it's not only Shell India that is facing these draft assessment orders. There are also other companies like SR, there are companies like Vodafone, there are companies from the Tata Group. So it's going to be an industry-specific litigation, but clearly Shell seems to be the biggest case as far as quantum is concerned, Ajay.
Ashwin, you must have taken some indications from the company Shell India also when this huge negative blow is coming. What is the thinking going on in the top management at Shell India? What is the recourse they would take now?
Well, Ajay, Shell officials are tight-lipped as far as an official comment or a reaction is concerned. But internally, to understand that their stance has always been that this inter-group issue of shares is in the form of a capital receipt on which tax cannot be levied in India. Right from the beginning, they have said that what the department is trying to do is to tax FDI, and that is contrary to law. But keep in mind that these are just statements that have come out informally. They are yet to issue an official announcement or an official communication with regards to this order, because this order, understand, has been issued just a few minutes back. So therefore, we'll have to keep in mind that Shell will, over the weekend, try to revamp its entire legal strategy. But one thing is clear, 9 times out of 10, the main strategy for them would be to go ahead and approach the Dispute Resolution Panel. But yes, we haven't heard anything officially as yet from Shell. They are still recovering. They are still shell-shocked.
Ashwin, and to give the company benefit of doubt, and also to be fair to the company, next 30 days, surely they can, go ahead and formulate a legal strategy on as a response. But tell us, what does it really mean for the corporate India by and large, and the entire tax and lawyer community who are watching the progress of this particular issue? How do you think, this will actually go in their observation?
Well, Ajay, keep in mind that this entire Shell case is being treated as a test case. The same way in which Vodafone was treated as a test case for cross-border deals, Shell India is being treated as a test case for transfer pricing, because this is perhaps the first time that the Income Tax Department has gone ahead and challenged the valuation methodology that is adopted by MNCs when they are issuing shares between two arms of the same group. That is an area that was hitherto left unexplored. It's for the first time that the department is doing it, and because Shell is a particular case wherein the quantum is significant and huge, $1 billion, therefore they are definitely going to closely track the progress of Shell. Also, there is another aspect to be kept in mind. Lawyers and tax advisors will also be looking at how Shell responds to the draft assessment order, and based on how Shell responds, they might also want to tag along and become interveners in these cases at the Dispute Resolution Panel. So therefore, whatever Shell does, in all likelihood, the rest of the industry is bound to follow.
Ashwin, this particular development comes at an interesting and a peculiar time because the finance minister, even as a clarification to the budget speech, and after that also have been saying that they don't aim to scare away big ticket investment coming into India or looking at India. And Shell India is one such company which is capable of putting in huge amounts of investment into India. So they would be wanting a fair trial to this particular issue, a fair resolution. How do you think the ministry side or the government would be viewing the progress here?
Well, Ajay, that is the biggest irony in this case, because remember, the budget speech last year and the budget speech this year also started with the finance minister saying that there will be a non-adversarial tax regime, but that clearly doesn't seem to be trickling down as far as the administration in Mumbai is concerned. There seems to be a disconnect. That is what tax advisors and lawyers are telling me. There seems to be a disconnect between the policy at the top and the execution at the bottom. But yes, what you said is very correct. Shell is a huge petrochemical and energy giant. Their interests in India are huge. Remember, since you track oil and gas, you must be knowing that they've lost out a chance already in the Barmer oil field to Cairn. So therefore, they would want to continue to look out for other options in India. And this tax dispute and this tax bill is definitely not going to help them as far as their investments in India is concerned. And let's be honest, Shell being a huge oil and chemical giant and being a part of a strong oil and gas lobby will definitely try its level best to get a fair deal out of this from the income tax department. But as of now, it does look like in the next few days they will approach the dispute resolution panel, and after that it's up to the panel to decide whether the tax department was wrong or whether Shell was wrong, Ajay.
Ashwin, stay with us. Just to wrap up the news once again, the big national story developing here, Shell India has been slapped with a $1 billion draft order by IT Department. IT Department has issued draft assessment order on the issue of intergroup issue of shares. IT Department has added around 15,000 crore via this particular draft order to Shell India's taxable income. What is the recourse for Shell India as a company? It has 30 days to respond, but the company can go ahead to the DRP, which is a draft dispute resolution panel, and can take a, they can take a stance in order to challenge this particular development. And Shell India says that the money which was received was a capital receipt and hence tax cannot be levied on it. Ashwin, from a step-by-step progress, from here on the company approaches the DRP, within 30 days comes out with an official response, then what? How does it progress from here on?
Let me break it down for you in simple words, Ajay. They have a period of 30 days. So by April 30th, they need to take a call on whether or not they are going to accept this order. In all likelihood, they are not going to accept this order. So therefore, the legal options available before them is to approach a 3-member income tax department panel. That's called the dispute resolution panel, which is basically to settle cases between MNCs and the income tax department. Now, the dispute resolution panel has a period of 9 months, 9 long months, within which they will conduct hearings. And after 9 months, they will pass their opinion. So therefore, one good way of Shell to in fact defer this entire tax liability could be to approach the DRP, and therefore the chances are really high that within the next few days or within the 1-month deadline, they will approach the DRP, because that means that then the case will get stuck with the DRP for the next 9 months, Ajay.